Well, welcome to all the Aussie expats wherever you are around the world. It's our Tuesday Q&A, and I've got a pretty interesting question this week. Somebody wrote in and they read an article in the Australian Financial Review last week, and it sprung the question about Aussie housing and what it may or may not do in 2021. And the article was headed basically that, leveraged housing is going to give you large returns in 2021, and went on to say that actually from a domestic viewpoint, Australian housing was the best returning asset class around, where you had by the end of 2020 national growth of 3%, and adding to that a generic rental yield of 3.6%, it came to an annual return of 6.6%. So the person then said, look, I was reading this article and I know that it was meant for large institutional investors, and it said that I would be able to get a greater than 10 times return on my invested equity if the housing was levered on a 10 times multiple and well located. So, as always, people like to look at things and jump into the areas that are probably going to give the most bang for their buck. So I wanted to have a look at this. I read the article, and it refers to a billionaire investor amassing their raft of advisors and saying, look, give me your best ideas for 2021. What do you think? And if you look through this, actually, it was written by Chris Joy, who's someone who I respect for his acumen and his investment ideas. And if you look through it, it makes a lot of sense, because if we look at the cost of leverage these days, it's so low, and it's something that is going to make, I think, a marked change in the landscape of investment in residential real estate in Australia this year. And you look through this, and this person that wrote in said, look, I'm not a billionaire, but how can I participate in this? And, it's interesting because we can. So the easy way is, obviously, if the banks were going to lend you over 90% on your property purchases, that would be great. You could potentially do exactly the same thing as the article suggests. But banks generally tend not to do that, especially if you're an expat. So if we take a step back from that and then work out and say, look, how can we do this in a pragmatic way, something that we can all do? So there are a couple of ways. One of them, and it's probably a little difficult, is to say to someone, I want to buy your property, I'm buying it as an investment, but I'd like a 12-month settlement at least. So in other words, I'm going to give you a 10% deposit, and I'm going to wait for a year before I pay you the balance. So effectively, you're doing the same thing. It's like a 10-time levered basis, because you're only putting in, let's say, $100,000 on $1 million property purchase. And it's the $1 million property purchase that may grow by, say, 10% over the next 12 months. And that would give you 100% return on the amount of money, the equity you've put in, which is just $100,000. So that's one way of doing it. But as we all know, people generally want to get their money far sooner than waiting for, say, 12 months when they sell a property. So another way of doing it, of course, is potentially buying something that's being built, or the term is buying something off the plan, or building something on a sort of staggered basis. But the reality is, if you did that and you paid 10% deposit now at today's prices, and let's use the same example, let's say you're buying something that's being sold for $1 million, you're paying $100,000 now, and this property won't get built for over 12 months. Now, the same scenario, if that property were to increase by 10%, it would effectively give you an extra $100,000 in value by the time you go to settle it, or 100% return on the equity you've invested, even though it actually genuinely hasn't been levered. You haven't geared it, you haven't borrowed at this stage. So a couple of ways of doing it. One of them's, as I've just said, buying something with an extended settlement. The other one, buying something off the plan. And look, the reality is, if you can afford to do it, you could potentially do both. And that always happens obviously when we look at assessing people and banks look at assessing us as borrowers and saying, what's your maximum borrowing capacity? Because you have to recognise that if you're going to buy something now with a small deposit, you still need to be in a position to meet that payment when you come to the end. Now the good thing is, even though we can't potentially go with Chris Joy's idea of a 10 times levered investment, the banks will still give our clients up to 85% leverage against their investment properties. So we could go pretty close at the end of the day, doing something now and potentially doing something for the future. So that would set people up, as the article says, for spectacular returns in 2021 if they're going to invest in Australian residential housing in well-located areas. And I would add to that just one other overlay: make sure that you buy quality properties in those well-located areas, because that will give you a far smoother run all along the way and give you, I think, a better outcome from a long-term investment viewpoint. It's something that we always look at. We then become far more granular. We make sure that these properties tend to be oversized so that they fit in with what's happening at the moment, where, in our post-COVID or during COVID situation, people are looking for larger places to live in, or if they're living in an apartment, they'll want a larger apartment with a multi-purpose room, let's say. It gives you some space, and that's really important. Or you want to have 3 bedrooms and a multi-purpose room. It's really, I think, important that we're cognizant of what may become a bit more of a structural trend as we go further. And when COVID is over, as it were, people, I think, will still want these things. The other trend, obviously, that we're seeing now is that people are looking at the coastal markets in Australia, because they're recognising that the work from home trend may remain more embedded, where people get the choice of either working from home or going to the office, perhaps on a part-time basis each and every week. So, these are all things that people need to look at. So you can actually take that into account when you're looking at investing and using leverage wisely. And I think that's the important thing here. Be careful that you use leverage wisely, but as an overlay on that, banks will generally at current levels still look out for their own interests and thereby ours as borrowers as well, because they won't actually allow us to over borrow. So these are really fundamental issues that I think people need to bear in mind, but it's not unrealistic to expect that sort of return on an investment in quality residential Australian housing that's well located, where you're only putting down a 10% deposit. It's not improbable that over the next 12 or 18 months, however long it takes for that property to be completed, that you may actually get 100% return on that equity that you've put in, that investment that you've made. So you don't have to be a billionaire or an institutional investor. You just have to recognise that some of these fundamentals, I think, are going to play out. And if we look at most economists now, most bank economists and others, they're all suggesting that Australian housing is probably due for an upturn over the next 2 to 3 years, and that's, depending on which area, up to 20% or more in their eyes. So I think that's something that we need to keep in mind and make use of the situation, because I often talk to people and say, oh look, I'm really conservative. And you go, well, that's great. But, they get something confused perhaps. I mean, being conservative now is actually recognising this as a market trend and getting involved, because otherwise you're just going to be a spectator and look back and say, well, that was a really conservative thing to do, but I didn't do it. Now, you have to ask yourself the question, why not? People are worried about perhaps, a loss, fearing that they're going to lose money. So at the moment, I think that's very difficult to do when, in fact, the gross yield on residential property is going to be more than the cost of leveraging that property and potentially the running costs. So we'll cover this in another time, but I think you're going to come into the situation where you're going to be able to, for the first time ever, positively gear high quality property in great locations. So I'll leave you with that thought and look forward to seeing everyone on Thursday when we do our quarterly review of everything that's happened. That's finance and property related in Australia. And then at our next Q&A. All the very best.